Welcome everybody. How we doing? Welcome everybody. Just checking out a couple charts. How's everybody doing? Wow, small crowd tonight. Welcome everybody. We'll give it a couple more minutes, see if a few more people want to trickle in here. Hope we all had a good day. It was a pretty fun one. Again, they've been generous with the good days lately, that's for sure. It is always tricky to figure these things out though when you're trading at all-time highs, unfortunately. Oh, we got the banker in here. Thankfully, we got these mics muted. Yeah, that big red candle's fake, Ty. That's what I was just trying to check out. I don't know what's going on. That's just some weird order after hours stuff. At least thus far, that's not real. That's only 730 shares, so it doesn't mean anything. I don't know what that means there. Hopefully you shorted it up here. Risky short it close. Uh, you took it while it was pumping. That's not really when you want to get buy puts. Okay, welcome everybody. How we doing? Uh hope everybody had a great day today. Another fun day in the market, It's wild with FOMC yesterday and then got a, at least mildly expected gap up today, much bigger than I would have expected it to be. Strong move on both, SPY and tech finishing the day up dang near $12 is just insanity. I'm still kind of sticking to my guns to what I had posted, about I think we see some buying on didn't matter 25 or 50 BPS. I think anywhere from 1 to 3 days. And I'm kind of looking for a pullback, definitely not bearish or anything like that, but would like to see at least on SPY, a bit of retrace, get us back to maybe these previous all-time highs, fill some of these wicks up. I'm not trying to flip bearish or anything like that. I would like a little bit of a deeper dip to kind of look into a potential bounce through end of September into October, but we'll see. But for now, just going to kind of play the market as it gives it to us. Really everybody should have about the same line in the sand. If we're above this basically 568.70, 570 area, you should probably be looking to buy those dips and at least trade the long side. That's what I did today. I got some slightly longer term shorts, couple weeks out, nothing, no huge position or nothing, and then was able to take advantage of some of this upside today to basically negate any red that those puts saw. And then, by the end of the day with that little pullback, we were closing right around break even on them. So no big deal there, but I'm just going to let the market keep on working, see what it wants to do for us. I imagine we got some more volatility in store, maybe tomorrow into next week. So should be a pretty exciting market for us. But tonight we can talk all kinds of things. This lecture, I've been trying to make them go a little bit faster so that we have some free time. I like to look at charts. I like to hear some of you all's ideas. I like, a little Q&A for 10 minutes, 15 minutes at the end. I've been trying to, get through the lectures just a little bit faster so that we kind of have that possibility. I want to hear what all of you guys are looking at, thinking about trades you've taken that worked or didn't work, your feelings on the market, any questions you have. If I'm able to answer them, I'd love to answer them. Of course, can't answer all the questions, but always happy to answer questions questions. So I've been trying to make a little bit of time for that at the end of all of these lately. So hopefully we'll have that. Like I said, we can check out charts or whatever, just talk about the market, whatever you guys want. But tonight we are talking, our main focus is going to be SMAs and EMAs. They're moving averages. For anybody who doesn't know what the moving averages are, they're basically just tracking, you know, the average of the closing price for whatever the time period is. And so a lot of people don't, and we're going to talk about this one later, the 920 and 50 or 921 and 50 EMAs. A lot of people use those, but they don't actually know what is going on with them or what they're even doing or what those numbers mean. And so today we're going to start with SMAs. They're simpler math, they're an easier thing. They typically look much more fluid on your charts. EMAs don't look quite that fluid, and we're going to get into why after we talk SMAs. But the SMAs are, they're a very powerful tool, even on short time frames. I got a bunch of friends who use them on, your 5 minutes, your 15 minutes, your hourly charts, and they can be a really, really great tool. The main SMA that I like on shorter time frames is just this 200. If the 200 is kind of going sideways, you can really be looking for, at least some amount of volatility. When you have it pointed up, and, this is on the 5-minute chart. When you have it really obviously pointed up, you can get those nice aggressive moves up. Or when it's flat, you can kind of trade some of that volatility and, potentially be looking to short rips and buy dips and that kind of thing. And then again, if it's, got a nice strong point up to it, you should really be looking to buy dips on those kinds of days. And plan for scalps on sideways days is, a really great way to use the 200. However, for me, where I think SMAs really shine the most is going to be on those longer time frames. The daily time frame specifically, everybody knows I use these all the time on the daily time frame. And what I always try to tell people is, if you are, trading any stock and you are trading around the SMAs, the daily and even weekly SMAs, both of them, you really, really need to be aware of where they are. And so what are the SMAs that I use? The main ones that I use are, this dark blue one is the 20, the light blue one is the 50, and then this kind of pinkish reddish salmon color is the 200. And so what do those numbers mean? A lot of people, they use the EMAs and SMAs and they have no idea when they type in the numbers for the ones they want, what those actually mean. And so what a simple moving average is, it's simple. The math is simple. They literally take the close of the candle and they add it to the next close of the candle, the next close of the candle, and they divide by how many there are. So when you have something like a 20 SMA, it is just telling you the average price over the last 20 trading days. If you have the 50, it's telling you the average price over the last 50 trading days, 10 weeks of trading. And then the 200 is obviously over the last 200 trading days. So, 200 of the 250 whatever days of the year, you're getting a pretty good idea. So that's how SMAs can be really, really powerful for us as day traders. When we're well above the 20, we know that everybody's making money. Everybody's been making money for the previous 3 weeks. We're very likely above the 50, so we know they've been making money for the previous 10 weeks. We're happy when we're above those. Well, a really prime example of these working is actually tech. So you have to think when, and let's get a blank one. Nice, making fun of Pratik. So tech, we had a real big pullback. I don't remember what it was, 10%, maybe over 10%. Big pullback on it. 15, 16% pullback on it to this 200 SMA. So what I always tell people, and one of the reasons that I was starting to look long down here on some tech names on SPY, I brought it up in Mastermind, I brought it up in OT both, around these days, that we could start looking for some longs because the risk reward is there. we know we have the 200-day down here, and you have to think, with the run that tech has been on, everybody's been making money at it. You always have to ask yourself, just big picture, nothing super technical. I mean, you don't even really want to call it fundamentals. The market sold pretty heavy on not a lot. We were selling on some bad news, but it wasn't horrible news or anything like that. And you have to decide when QQQ goes under the 200-day, that means basically every single person that has bought shares in the previous 200 days is now red on those shares. And so when you hear that kind of thing, you might not think much of it, but you have to, remember to tell yourself that is 40 weeks worth of gains, almost the entire year, a good chunk of the year. And is the market really ready to give up, basically 3/4 of a year's worth of gains? And that's why when you come to these, you always want to be aware of where they are, because you can find volatility here. So that's why I love the simple moving averages. You can always pull them up. As I said, they're much more fluid than an EMA. You can pull them up, and they're the easiest thing to back test. When we get breaks above and retest, they work. When we get breaks below and retest, they will typically work. So trade around these when they're there. And when we are trading in those areas, always think of them as, the strongest resistance or support on the chart. Wherever the SMAs are landing, you will almost guaranteed get a reaction there. And so that's frequently how I describe SMAs and EMAs to people, is there's support and resistance lines that can have angles. So just think of them as a support and resistance line. And then when we're working towards these big ones, always remind yourself, is the market ready to give up a year's or 3/4 of a year's worth of gains on some news not out of our country? Probably not. So you can look to play bounces down here, with your stops below it. Same as if we're ever, breaking below things. As I said, some breaks and retests can frequently work. Breaks above and retests can frequently work. When you get crosses, and we're going to talk a lot about EMA and SMA crosses tonight, it's my favorite way to use them overall. So we're going to talk a lot about those. And, if we get a cross, you can start to look to buy those dips. You can buy the dips back down. Working the other way, I mean, we probably don't have a very good example recently. I mean, this is a reasonable enough one, but this was all news, so it doesn't, in my eyes, I don't count that really. But I'm trying to find us a nice downtrend one. I mean, these just cratered. We had the cross here, so you could have got that bounce up on the short here. But that's the type of thing I'll look for, a cross on those SMAs. And if you get that cross, then you can look to short the first bounce or long the first dip below it, and your stop will always be really tight. We can see over here, and the market was very, very volatile at this time. But we can see over here, if you're shorting this bounce up to it, you're gonna have, $3 or $4 of risk on this trade, and that's really it. If we get above that, you have to get out, or you can look for moves down to the lows. Obviously, you don't always want to look for that $12 move down or whatever, but always watch for the crosses on the SMAs. And as I said, just think of them in their very simple terms. When the market is selling, is it ready to give up 20 days worth of gains? Is the news ready to give up 50 days worth of gains? Is the news ready to give up 200 days worth of gains? And always ask yourself that when we're trading towards these SMAs. And you'll frequently see that the market is at least going to take a bounce around them. So I can't talk good enough about the SMAs. They're amazing. And I'm a question from Gary. Across, so the thing is, anytime I play a cross, if we're playing one of these crosses and we're looking to buy, maybe a dip back down into it, we are even catching another cross right here, I will play it for the volatility. But we know that the market likes to range. So we don't always want to be looking for a reversal. But if you're taking one of the, if you're taking a trade on those SMAs off the daily, then if you're taking that sort of a trade, look for a volatile bounce. Maybe you get a big breakout trend reversal, but I'm looking for volatile bounce to previous highs. And then I would rather let the market, set some new highs, pull back and confirm it for a move up, as opposed to really try to catch it just off of a cross. However, when we get into some of these EMAs in just a little bit, you'll see some things that I like to use to maybe look for to get in there a little bit earlier than you'll see the cross on the SMAs. Because as all EMAs, all SMAs, if the market is ranging, then they're stuffed with fake outs. Let me think of one. I think AMD's is probably, it's okay. But see, if the market's ranging and you're getting like a weak cross up that just goes sideways, it's selling below it, it's bouncing. When you see this type of movement, it's not very helpful. We would want to see this thing start curling up and then keep going up. When you barely go up for, this was 3 days, we pointed up above that, and then we just started going down. You always want to, take the crosses with a grain of salt, because sometimes they give you a nice breakout. Sometimes they'll give you a big reversal up or down, but frequently they'll just give you a nice couple days of volatility. And so that's for us, mostly day traders, swing traders, that's the types of things we're looking for, and where a daily SMA can really be helpful. And then also, if you're, you can use them if you're, say, in a trade for some confirmation to stay in it. Maybe, you bought this breakout and you're swinging, so you have a more decent position and you catch these nice moves. Well, as long as this SMA is pointed up, you of course, don't want to hold a contract for 2 weeks of chop, but as long as this SMA is pointed up, you can kind of have some confirmation to hold that trade. So, many, many ways to use the SMAs. And so that's it, unless we got any questions on it. Can you see SMAs on Webull? Yeah, but I got to be honest, their math is weird. It frequently won't line up. Like if I give you an SMA, if I mention it from Thinkorswim, a lot of the time they'll kind of be a different place on Webull. I couldn't tell you why, but they are. Okay, so no questions on the SMAs. It's not boiler bands, Narvin. It's a guy, Bollinger bands. I use those all the time. I love them. They're actually going to be in a lecture here soon. Okay, so with that, simple moving averages, as I said, they're taking the close of the candles, whatever your number is, close of the previous 20 candles, divide by 20. There you go. And it gives you your SMA. So super simple. Boiler bands. So the next things we're going to talk are going to be EMAs. We are not going to talk the math on EMAs, because I got to be honest with you, I can't do the math. So the difference between an EMA and an SMA, SMAs are nice and smooth and calm, An EMA actually puts a bit more weight on recent price action. So that's why you'll have more of these volatile ups and downs, because if we're using the 9 EMA, again, this is, the 9 EMA, the reason it's so volatile, and, we use it on the 5-minute, it's only looking back 45 minutes. So it is giving you the average price paid over the last 45 minutes, but with more weight on, if we're saying here, they're putting more weight on this candle and this candle and this candle than this candle and this candle. So that's why you get the more erratic volatility from an EMA. And it's why we as day traders, at least most of us, have some EMA combos that we really like on the shorter time frames, mid-range time frames. And so that's what we're going to get into now. Again, we aren't going to go into the EMA math. Look it up if you want. There's like letters and numbers, and yeah, it's a lot. And so I don't do that. I just use the EMAs and have a rough understanding of what they are trying to tell us. And so we're going to start with the classic tried and true. So I trade the 9, 20, and 50. Blue one's 9, orange is 20, yellow's 50. A lot of people use the 9, 21, and 50. As we've just learned, that is the difference of one candle. So what you see is the 20 or the 21, it doesn't matter. They will end up being very, very similar spots, other than times of extreme volatility, but it's never an issue, And so the 9, 21, and 50, as I said, they're likely the most popular ones that people use. Flips uses them all the time. I use them all the time. I know 1K uses them. He even uses them on longer time frames. Tilio, Toasty, all of us use these EMAs at some point. We might have combos that we like more, and I actually do, but these are the tried and true. And so I wanted to talk about these first and some ways to use them and ways that you might see people using them, hear Flips using them, me, things like that. And so we're going to start with the biggest one first. This yellow line down here, 50 EMA. So it is actually, it's taken in a decent amount of time. It's taken in, give or take 4 hours of market data. So and again, heavier emphasis on the recent price action, but how I mostly use the 50 is I think of it as the trend setter. And so if we are trading above the 50 EMA, we are likely trending upwards or, like sideways range trading, but upwards. As long as we're above the 50, that is likely what's going on. As soon as we're below the 50, we are likely either downtrending or kind of choppy sideways to the down. So it's just a really good one to use as your, trend setter in your mind. Also, it can be the one to give you while they're higher risk because you've given up your 9 and your 20, bounces off of the 50 EMA will frequently provide better volatility than a 9 EMA touch. And so we use these EMAs intraday because they're more volatile. They pick up movement a little bit quicker. They're putting the weight on the recent price action sooner and or as more important in the math. So again, if we're looking at the 50, we're looking back, we're looking back 55-minute candles. So we're looking back 250 minutes. So basically 4 hours. But we're putting more weight here. So that's why we can use it as our trend setter. People are above water. Day traders, algos, they're above water for the last 4 hours, as long as we're above it. So the bounces off it can frequently be very, very volatile. But as I stated, you take on additional risk because you can see the market trying to get us under there. You will frequently have more drawdown, which some people are okay with, others aren't. Big wicks like this terrify people and then they get bought up. And so think of your 50 as your trend setter. The next one we're going to talk, obviously the 20. And how I very rarely use the 20 as on its own. I wouldn't use the 20 without the 9. And how I like to use these two in combo is how most people do. You buy pullbacks into it. But for me, I have a somewhat strict rule where and we'll just use today, of course, and I put out my disclaimer every time. This is hindsight trading. We get to pretend like we're like the greatest traders ever, but maybe this isn't how it went, during the day. Maybe the price action was scary to enter trades. But how I treat the 9 EMA is when we've broken, above all the 50, now we're selling back down, then we're getting back above it. We're above the 50, we're holding above the 50. That's when I start to say, and we've had 9 cross 20, so we're starting to look long, and 9 cross 50, and little pullback, but 9 stays above the 20. So we start to look long. Well, my rule for the 9 EMA is I will buy pullbacks on it twice. So we break above it. I would be a buyer of this pullback. This one of these two candles, it ends up being right on the 50. It won't always be like that. But to me, this is the first break where I feel like we have some confirmation of an uptrend. I would look to buy this pullback here. Happens to be the 50. That's likely why we got this volatile movement. Well, the only other pullback that I would personally buy is right here. And if I miss this one, I'm not buying this pullback. I'm done with it once it has really been tested twice. That's my limit on it. I know sometimes you'll end up missing, just massive. We have one just recently. You'll end up missing some massive trend days. by doing that, but you will have much more safety in your trading. So on a day like this, which is obviously unheard of, you could have been buying every pullback to the 9 and making money. Well, when I have this happen, so now I've confirmed trend, we've broken above it, I'll buy this pullback and I'll buy this pullback, but I won't buy this pullback. I won't buy this pullback. Did they end up paying? Yes, but I like to risk it 2 times. That's it. And it has saved me a lot of heartache in the past because, you can count this breakout and you can count this as the first test and this is the first test, but I don't consider this, and even though we've broken the downtrend, I don't especially consider this an uptrend really until somewhere up here where we set a nice strong higher low. So this is where I start to look for the uptrend being set. We've got the cross, now we get another cross, then over here we get another cross, and all pointed up. I'm a buyer here. I'm targeting basically high a day, but I'm a buyer here and I'm a buyer here. That's it for me. That's how I use the 920 and 50. Of course, this is a dramatic day, but I use the 50 as my trend setter. If we're below it, I'm likely looking to short bounces. If we're above it, I'm likely looking to buy dips, and I will buy the dips to the 9 and the 20 2 times only. And that's just my rules on it. I keep it nice and simple. It works, the 920 50 is one of the more classic day trading things that we can use, and a lot of people do. So most people should always, kind of have their eyes on it. It's a really, really great intro to EMAs, how they work, and some ways to use them. So any questions, 920 50? As I said, we're going to kind of cruise through these a little bit. I got just a few that I like to talk about. Okay, perfect. So next one that we're going to talk about, and this is one of my favorites. Very few people use it. I actually just found out Tilio uses it. I have always used it on short time frames. It's a really, really great one to pick up on volatility early. However, you guys know what I teach. If you're early, you're wrong. So there is a very, very fine line between picking up on volatility early and actually getting the trade wrong because you got in there before it's signaled. And so the combo that I have right here, purple line is the 5, blue line is the 13. So why do I use this combo? What's like my mindset behind it? Well, one, it's an old combo. People have used this one for a long time. Very few people use it anymore. I think just because it kind of went out of favor, and some of the, people, some of those original EMA scalpers, they've kind of been forgotten, like they've, some of the things they did and some of their ideas have unfortunately, been forgotten. And so what do I use the 5 and 13 for is quick volatility. You have to think that the 5, the purple line, it's only looking back 5 candles. You're taking 25 minutes of data into it. So as you can imagine, it will frequently have fake outs on it. Crosses will happen, drops will happen quickly, bounces will happen quickly. So if you are using it to scalp, you're looking for a cross. So here's an example. We have this pushing up, we have our cross. It's going to be formed after this candle. So we buy the first dip to that 13 EMA. Doesn't matter which one of these candles you catch. We buy this first dip to the 13 EMA. I am looking for 2 or 3 candles. That's it. I'm looking for 2 or 3 candles. That's all I want from the trade. And I am always going to be targeting recent highs. So I'm going to buy either one of these candles. And again, I want to emphasize, we're hindsight trading. You got to pretend like you're great at it. I want to buy the dip on one of these candles. I want to target this high. That's all I'm looking for on that trade is see the cross. And you, of course, we're only talking EMAs tonight. You cannot use just an EMA or just an SMA as your confirmation. You need to make sure we got buyer volume. I'm assuming the buyer volume is even passing the seller volume at this point. We got buyer volume. We've had a pullback with good buyer volume. We've had another pullback that ended up with good buyer volume. Nice even continuation, reversal candle, whatever you want to call it. Buyers won this candle, even though it's red, and then you get your nice push up. you're out on this candle. You're just looking for that quick trade. You had volume to back it up. We likely had a bunch of other names in the market pushing or at least holding support at that time or pushing up on resistance to break. So this is for quick volatility intraday. You can see as soon as the market goes sideways, it becomes very unhelpful. We're still at this point, we're within a range, so you get across down, maybe you could make a couple bucks on this short. You get across up. If you bought that pullback, you got messed up, and then just sideways, sideways, sideways. So no information here. You want to use it at times of volatility in the day. And then again, if you do start to see, okay, we didn't, we crossed down, we crossed up, hey, we didn't cross back down, and we're starting to move up, we're even having a nice little increase in buyer volume here, you can look to, again, buy that dip on it. But when we're getting this sideways movement, and you can see because, we get to see all these candles now. Well, when they're forming, the line's one candle back, always. The line is always one candle back. So you don't necessarily know that it's going to go sideways, or you might see this and you might want to say, oh, we're going to get across. I'm shorting the first bounce up, and then you get messed up. So you want to wait for it to, those times of volatility. And, things like this. Keep the trend going down, keep that one above it. You can short all these bounces up here with tight stops, but you're going into end of day. It's risky, probably not worth it. So that's the 5 and 13. I love it for volatility. And then Tilio, one of the only people I like to learn from, he messages me one day and is like, oh yeah, and I think it was this one. Might have been this round off in April. Maybe that's what it was. But he's like, oh yeah, I used the 5 and 13 because it's like a really, it's just been riding that thing up the trend. So all of a sudden I look back and then I start to, I love EMAs because as far as back testing, they're a snap. Like you can just use your eyes and see, okay, when we are in a trending market, the 5 and 13 act very, very well, and buy those dips to the 5 and the 13, stops below them. And sure, you're going to get stopped out sometimes, but it's a very, very powerful tool for telling you trends on the major timeframes as well. Okay. That's 513. Any questions? Oh yeah, so John, we've talked a little bit about crosses. We've talked about buying those dips into it. Those crosses on the 5 and 13 intraday are really, really nice one. We just got Norvin just yapping. How do you know when there's a dramatic move in the market? You don't. But, and I don't know, I'm assuming you were asking me that when we were talking the 920 and 50. You never know that there's going to be a dramatic move in the market, but the 50 EMA is a point where you frequently can find a pretty dramatic move in the market. As I said, the unfortunate side is the volatility there typically requires you to have a little bit wider of a stop. And well, that's FOMC day, so we got to ignore that one. And maybe you buy this and maybe you get a nice stop out like this, but other times maybe you short this and this thing blows you out. And so you get that big stop out. So you can never use it as your only form of confirmation, but you'll frequently find volatility off of that 50 EMA and frequently bigger volatility than the 20 or the 9. Do I use the 1 minute? Never, Norvin. The 1 minute is useless. Viral, we're getting into swings here next. As long as we're happy, 513, we're good there. So next one that we're going to talk, and this one, I like this one, and it's fine on shorter time frames. It works well, and it works well, but it's not amazing on the short time frames. Of course, we're on a day. Let me see, make sure I clicked on the right one. Of course, we're on a day where unfortunately it shows a really good trade. This one's frequently not the best on the shorter time frames. By the time you're picking up the cross, you're a long ways away from it. It does a halfway decent job at showing you trends, but this is the 12 and the 50. And so I like the 12 and the 50, and I like the 12 and the 50 for longer time frames. I typically am going to be looking at it on between the 30-minute up to maybe the, maybe the 4 hour, but really, 15-minute to hourly. If you look at the 2 hour, it can be another good one on there, but it can do a very, very good job. And why I like to look at it is, again, I look for crosses. And because we have, and we're looking at this on longer time frames, as I said, the 30-minute, the hourly, whatever it might be, because we're looking at this on longer time frames, there's a lot more information in there. However, you'll notice that the numbers are pretty far apart. We have a 12 EMA and we have a 50 EMA. So one is looking, in the last 6 hours, and one's looking, way further back. One's looking in the last, 10, 12 hours. So it will pick up across on these longer time frames, typically pretty early. That 12 will get to crossing. And once it crosses over the 50, that's when we start to have interest in it, and or crosses under the 50. And you'll notice that because these EMAs are lower time frames, again, just to point out, if we get in some sideways action, you're going to have crosses ups and downs that make it hard to use. You want to try to use it when we have sideways action that is ultimately met with selling, or or on the other way, sideways action that is ultimately met with buying. So you can see we went sideways, big old sell where they spread out, and then we get a cross. Well, if we're day traders, if we're longer term traders, if you're into swing trading, look at the 12 and the 50 on the 30-minute and the hourly. And not only will it pick up across pretty dang early, even this one was printing right before market open. So you really could have bought the dip down to these, knowing that's your stop. And then where it also becomes helpful is knowing to stay in the trade. If we're, consistently closing above these levels, if we're consistently holding above the EMAs, if dips are being purchased off of those EMAs and they're, fighting to hold them, you have a halfway decent amount of confirmation. You obviously can't use it as your only one to stay in that trade and maybe keep riding that trade. Obviously this is just a spectacular run on SPY. A cross is not going to typically give you a $30 move up, but this is a really good mid time frame one to give you some confirmation if you can stay in the trade. Again, you can look at the hourly. It's going to pick up the cross on the hourly likely a little bit later. But again, if it's holding those levels, holding those 30 minutes, holding those hourly levels, you're likely stopping out here, unfortunately, before a big move up. But it's like $20 up at that point. Use it. And they work on basically everything. You can look for those apple crosses, or big cross below. These can be confirmations to hold short, hold long. Again, if the market is sideways, they aren't going to be helpful. The crosses aren't, the EMAs, SMAs, relatively useless on the shorter, or when the market is trend or ranging rather, because they aren't telling you anything. There isn't volatility enough to move them up or down. So we can know as day traders, of course, I love trading a range. So, buy the dips to 224, short the rips to 227. But when they're sideways, don't use them. They're unhelpful when you use them, or when you try to use them when the market is sideways. So that's 12 and 50. Again, one of my favorites for that, 30-minute hourly time frame. Yeah, we can talk AMD after this. Remind me at the end. So I got two more to talk about. One of them is going to be super quick, and then this one is also going to be quick. So first one the one that we're going to talk now is the 13 and the 34. So again, this is a much less commonly used one. A lot of people don't use it anymore. The old timers are gone that liked it. So I really like it, and I use it again the exact same way I use the 12 and the 50. I like to look for crosses and I like to trade those crosses. Then I use it for confirmation to stay in the trade or exit the trade. However, This is one I like on those longer time frames. The 4-hour crosses on the 13 and the 34. Some people use the 12 and the 34. Some people use the 14 and the 34. As I said, they're all pretty dang similar. But when you start to see crosses on, your 4-hour charts, your 12-hour charts, your 8-hour charts on the 13 and the 34, you are typically getting into some decent momentum. When the cross picks up, you because you're looking at a longer chart, because when you're looking at the longer charts, this is a 4-hour candle. So by the time this cross had printed, we were all the way down here, so we don't have an entry on it. So when you're using these EMAs on longer time frames, you have to be patient and wait for the trade to come to you. And so we're going to use Apple as the example. We print the cross right here. It doesn't print until after this candle is formed. So we haven't seen the cross. And really, we're going to see the cross basically on this candle. Well, now we can start looking to short the bounces. So this one could have been your first short, your move up to here. Unfortunately, well, not unfortunately, but market sells. Hopefully you sold, you made a few bucks. You better trim there. Next day, market bounces up again. Well, we know that if we liked the retest here, our stop is above there. So if we stayed short, didn't trim, even on this bounce up to here, we are staying in the trade because the confirmation is there. Or if you didn't take the early entry bounce, which it would have been understandable if you did, cross had formed, we were there. There was reasons to be looking short. And we're seeing big selling volume. Market was selling, there was reasons to be looking short. Well, if you wait, here is your very good entry. This is the awesome entry. You get the gap up to here and catch it that soon, 2 days after the cross. Well, now you get to ride it. And this basically becomes your stop. Again, we're looking back in time, so we're getting to see a dramatic move. But you bounce up in your retest, you stay in this trade. You stay in this trade. And really, until you get a close above it, there's not a ton of reason to exit the trade. However, if you hold from 227 to 216 on Apple and you haven't dumped most of your position here or here, you're insane. And then if you are that insane person, well, as soon as we're closing above it, you're out of the trade. So the 1334 combo, longer time frames, let the cross happen, and then look for the retest. And you're frequently going to find yourself having a very tight stop, $2, $3. Again, this is for your day traders, your swing traders, people who trade those longer time frames, not scalpers. These aren't the ones that you trade with a super tight stop. They're the type of thing you have to let the trade work. And sometimes you'll get the cross below, but you will never get an entry and the market will dump. And then you can try it, but you always have to take market context into account. And we got higher lows forming, so you can try it, but after the strong downtrend, I don't feel as comfortable shorting, and I wait to see if we can get the cross. And then you can see we get the cross, we never really get a close enough retest until right here, and the market starts ranging and you make no money, so always take market context into account, but keep your eyes out for those crosses. And if you're a day trader, if you're a swing trader, these can be awesome confirmation to stay in that trade. So that's it, 1334. Again, any questions? And I prefer it on the 4-hour. That's really the only thing that I look at it on. But those 4-hour charts were great, 8-hour charts, 12-hour charts. All of those are really, really good candidates for it. Okay, no questions there. So the final one that I'm going to talk about is actually again a unique one. This is something I picked up from Al Brooks. He's awesome. And I'm going to initially talk about it on its own, but then I'm going to add in something else that I really like to use with it, which isn't an EMA, but we're actually going to talk about it in another lecture of mine here pretty soon. But the first thing that we're going to talk about, and unfortunately, if you aren't on, and it of course works on the hourly, but if you aren't on Thinkorswim, then you might be out of luck on using this, but it's the hourly 20 EMA. However, I like to use it on a 5-minute chart. And why do I like to use it on a 5-minute chart? Because you get to see again, your 20 EMA. So you're looking back for basically a whole day. So you got, 20 hours, technically futures are open more than that, but you got 20 hours of trading in, and each one of these is taking that into account for you. So when I trade the 20 EMA, and again, like all EMAs, if market is, all EMAs, all SMAs, if it's sideways, it is, it's not going to help you a lot. However, in most days, if we come to it, it will act as very strong support or resistance. So obviously, if we get below it, I'm likely looking to short. Maybe not this first candle, but the retest here, I am very likely looking to short it because we have broken below it. So I feel comfortable to be in there short. It is one, the hourly 20 EMA comes into confirmation on a trade for me basically every single day. You will realize really fast it's one of the better levels to have on your chart. Again, if we get breaks above, then I'm buying the retest. If we get a break below, unfortunately, we never really get a retest. Maybe I tried to short it here. You would have made money on that first test. You get $1 flush down if you're fast, of course. But this is on my charts every single day. And I use it not only for confirmation in trades, but I use it to kind of analyze the market as well. So I trade SPY all the time, everybody knows. And so I also watch Apple, Amazon, Microsoft, Nvidia basically every single day. Those are the four big names I watch. Well, some things that I like to look for are all of those stocks above their 20 or hourly 20 EMA? Are they all below their 20 EMA? If they're selling below their 20 EMA and SPY or QQQ isn't below theirs yet, I'm likely looking to short SPY and I won't buy a dip to it. Or if they're above it and SPY and QQQ aren't above their hourly 20s, then I like to, then I will say, okay, SPY and QQQ are likely at least going to try to get over it if all of these other names are. This is kind of similar to how I used to, or not I used to last week when I taught the opening range class. This is how I use the opening range as well. Use it to analyze the whole market. If we got most of their names trading above the hourly 20, then we know we should be buying dips. And the market for the last day has been making money long. If we have most of the names below their hourly 20 and the ETS below their hourly 20, we should likely be looking to short rips because the shorts are the ones that are making money. So it's excellent for bias. Well, I'd like to add one more part to it, and that is VWAP. So I love VWAP. Obviously, again, a very, very strong level on the chart. I forget you always have to get rid of these other ones. Well, you don't have to, but I don't use them. I use boiler bands, Norvin. So VWAP. I love VWAP, volume weighted average price. So we know the average price that people paid for shares, if they're above it, they're making money. If they're below it, they're losing money. So I use VWAP in the hourly 20 all the time. And I use it to kind of give myself an early bias in the day. If we are, above hourly 20, above VWAP, I'm looking to buy dips. Obviously, you lost money if you bought all of these. Well, maybe you made money, but you lost money. Once we are in between hourly 20 and VWAP, I start to kind of look for ranged movement. I want to, maybe buy the dip at the hourly 20 with a tight stop, looking for a bounce, maybe short the rip at VWAP, looking for nothing more than the hourly 20. When we are below hourly 20, below VWAP, I'm shorting bounces. That's, I keep it, and I'm never going to use only I only or I will never only have one form of confirmation, but I like to use this for a little bit of bias. Glance at hourly 20 and VWAP. Man, if they're just sideways, we're just trading right around them. And well, I guess this is FOMC day, it doesn't count. Then don't even trade it. If we are above hourly 20, above VWAP, you can try to buy those dips until you get stopped out below VWAP. Obviously, these VWAP dip buys were working today. So the hourly 20 VWAP combo is one that I use all the time for my daily bias. And again, when I'm wrong, I'm wrong. You know, if we're buying dips here, then I will, if I'm buying dips here, then I'll stop out when I'm wrong if we break below. If I'm buying dips up here again, I stop out when I'm wrong. You know, that's all you can do as traders, but it can be a very, very powerful tool to either tell you, ranged movement, trending movement, are we buying dips? Are we, short and rips? It's something that I use every single day. And I really think helps most traders. Most of the people in here who have started putting the hourly 20 on their chart have really, really come around as traders for sure. It's a very simple thing to just kind of run on there and make your life a little bit easier. Okay, so let's see. We got questions. Nope, never 1 minute, Norberto. So now you're seeing, so viral, you got to see between SMAs and basically that 1334 and 513 if you like it. Those are what I'm looking at on longer time frames for swings. I need them pointed in the correct direction. I need to be above them and I need to be trending the way that I want to go. I'm not going to use them as, anti-trades or, the anti the market, reverse the market trades. I want those things in my favor when I'm trading. Gary, I like all of those, but RSI. I think RSI is just kind of, I don't know. I've never met somebody that when they quit using RSI, their trading got worse. I'll put it that way. But volume, VWAP, EMAs, those are three really great ones to do. But it all comes down to support and resistance. EMAs, all this stuff is great, but when we're trading around, when we're trading EMAs and we have our levels and we have our trends, if we have these levels down here, and let's just pull up, I mean, let's we can pull up some studies here. Let's go 92050. So, EMAs are great. However, they're telling you to short this while higher lows are being set in the market off of very, very strong support. So they're great, but they can make you forget market context. So when I see market bouncing off of exactly where I think it should bounce, setting a higher low, which means technically a trend is now formed, I'm buying this dip. Even though we are below all of these EMAs, I'm buying this dip. Target 1, target 2, target 3. I feel more comfortable buying the dip because the trend is up. Again, we sell back down to this level, and even here I feel comfortable to buy it because my stop is 50 cents below me. And again, targeting EMAs. Once this has formed, the trend is up. So while people were trying to short this, and yeah, they were making some money, the dip buyers are making the real money and ended up catching the real move, So they're great, but trends and support and resistance I put more weight on those every single time. Daily SMAs are huge, but they'll be one level all day. They're a support or resistance level, but support and resistance way more important than any VWAP, EMA, RSI, any of that stuff. Get your support, resistance, trends, volume, slap the hourly 20 on there, and you're off to the races. AMD's price action on the 10-minute. Well, I have to be honest with you, I don't trade the 10-minute chart. So I gotta try to find that. 10-minute chart. Well, I mean, it's pretty obvious. This one worked, and as I told you, I'll buy the first pullback, I'll buy the second pullback. I won't buy the third pullback. So, I mean, looking at the EMA or looking strictly at the EMAs, and then obviously this is what else, I mean, and like I said, I don't trade the 10-minute chart, but right here, we got obviously our pre-market high. We break above it with our retest, basically right at an EMA. We know that our stop is really under the 20, basically under 154. You're risking like 50 cents right here. So this one, reasonable enough entry, and then good entry, another good entry. So that in the sense of EMAs, this is a nice easy trend day on this name where those pullbacks worked really well. And of course, looks nice on the 10-minute. Probably also looks nice on the 5-minute. You're even getting the dip into the 20, and it's still telling you to get in there at the exact same time. So, it was one of those days where I guess the 30 didn't give you the pullback, but, all time frames, you could tell you should likely be buying the pullbacks on AMD. And then as you get into longer time frames, I mean, you have bullish candles closing near their highs, closing above the previous candles. So there's plenty of reasons to stay in those trades. So what I like to tell people, how do I identify a choppy day? You can identify it very early in the day. So my rule of thumb, if you have a failed breakout up and failed breakout down, and I guess we can even do the more dramatic one. Failed breakout up, failed breakout down. So this is 1 hour into the day. Here's our range. It's set. And you can do that. This works on all stocks. You have a failed breakout up, you have a failed breakout down. You are now looking for a range. Is it a tradable range? Yes. But the market will tell you, and it's, part of opening range, part of things like that, there's all kinds of things to look at. Failed breakout down, failed breakout up, you are looking for ranged movement. And when the market is going to go, when the market decides that it wants to go, it will tell you, you'll have this failed breakout down, but then you find buyers, and then sets a double bottom and goes for you, you won't have here's failed breakout up, failed breakout down. You're looking for range trading until you're really holding above here. So you can see it didn't want to break that range until the last 30 minutes of the day. So I identify it early. If I have one straight breakdown, bounces shorted, you're looking to short it. You want to see the confusion early. This one took a little longer. This one was 2 hours into the day, but good enough move up and good enough move down on those that it was worth it. And then at that point, you failed down, you failed up, you go sideways. So just quick glance at any chart and you can figure it out pretty quick. Husky, we did the hourly 20. Gary, I used the 20 EMA and VWAP together. Norvin still asking about CART. Yeah, the really stupid indicator. Hourly 20 EMA, John. AMD, what? Okay, so what would have told me to exit? Let's actually, great question. So if I'm trading AMD, what is telling me to exit if I'm in this trade? I'm always going to be on the daily chart and I'm going to look left. So we got 160 right over here, 159, 160. That's huge. Everybody should be watching that level. And of course, we could push all the way up here to 162.37. That'll also be the trend. If we had broken above this, that's where I would have got out. But I just look left on the chart, 160. So if I was lucky enough to get this buy early, and I guess I got to see where we opened. Oh, the 154.50 break and retest. Oh yeah, that was that pre-market high. So if you were lucky to get this early, basically the second we break 159, your stops are tight. I mean, if you are a day trader, you're holding. I mean, I get it. If you've not every day is going to be like this, but if you popped like $2, as long as you weren't in some stupid way out the money thing and you're now in the money, you have reason to hold. And so once this one sets, depending how you trade, you can use these lows as your stop out. Yes, you're giving back profit, but once we've sold and bounced, your stop goes to here. Once we've sold and bounced, your stop goes to here. And then once we've sold and then took a little bounce, your stop's here and you're likely getting out at 158.32. I, of course, trade different. I would much rather catch this move, get out. If I want to still be in there, buy the pullback. Get out. If I want to still be in there, buy the pullback. And then again, if I want to still be in there, buy the pullback and keep the stops tight, candle by candle, basically, because that's how I like to trade. You make more money, you make it with less stress. You don't have to watch the market pull back on you for an hour, and then probably right about the time you finally decide to stop out is when the market bounces, So for me, I like to, I would much rather catch this volatile move, get out, buy the pullback, but that's just me. But as far as looking at these EMAs, there was really nothing all day that told you to exit until right here. I mean, you could even make the argument for the EMA cross. That could have been your exit. But let's be real here. You caught a $5 move on a $150 stock. If you aren't all out of the position, with tight stops. You're just being super greedy. Yeah, see, and you can never think that because this is a huge level. And you always have to look at those daily charts, and like the things on a parabolic run. And so I know a lot of people actually got trapped in this one today, unfortunately. You always have to just look left and say, do I really think we're going to break above here? Do I really think we're going to break above 162? Do I really think we're going to break above the trend, which we have not been able to break above in since March? This is an extremely strong downtrend, This was a great dip by down here, but you have to always ask yourself big picture. Do I really think this is the time when it breaks? And 99% of the time you should not. And especially major number with major trend and another major level right above it. This will be hard to break. When it breaks, it'll put in a nice bounce, it'll probably see 170 real quick, but you don't want to be long into it. That's you never want to be the one who's like long into this. You want to exit and either play the breakout or play the break and retest if it comes. Okay. Nice little class tonight. Thank you everybody for being here. If we don't have any more questions, we got a few minutes if you need them. But if not, thank you all for being here. Have a great night. Tomorrow's Thursday, or Friday. Sorry. So trade safe on them Fridays, Hopefully everybody had a really good week and gets to have a little bit of fun tomorrow. Yeah, right on. Thank you all so much. Yep, and as always, thank you everybody. My DM's always open. Happy to have you here, and we will talk to you tomorrow.